Good morning, it's Jonathan Barrett with this week's Market Buzz. Obviously a lot happening out there, there's no doubt about it. I guess a bit of a wrap from last week. US equities recovered from steep losses. There was quite a large sell-off there, but managed to claw back some gains. US government's back in business, so now we've got to wait for a lot of data to come through, because this is going to influence the rate decision from the Fed. Rates are now moving around 50-50 chance that we will get a rate cut. And we're still grappling with high AI valuations, and there's a risk that a bubble is looming. More about that and a little more in-depth analysis on that later in the talk. Bitcoin tumbles to a 6-month low, 95,000. That's a lot of money for one Bitcoin. Eurozone economy grew by 1.4%. That's, I guess, if anything, in the third quarter. That's a little bit more encouraging to see that Eurozone is picking up. Precious metal markets succumb to some profit taking, down 2%. Silver down a whopping 3.37%. I guess when we look at that, still quite positive, the sector, but obviously quite a large correction. In China, we had inflation gains of about 0.2%. The interesting thing there, that's the largest since January 2025. But retail sales missed expectations, soft 2.9%. That's the 5th monthly decline in a row, and that's causing just a little bit of concern across the board as to how that economy, which we're looking to pick up, is looking to pick up, because we really like to see move onwards and upwards, because that's going to support the global GDP. Okay, let's have a focus now. AI. Now, it's a bit of a buzzword. Obviously, the NASDAQ is trading in a volatile area. That's, I guess, when you look at it, it's got sort of a market trying to find a top when you get these big, large swings. And obviously, there are a little bit of issues there. When you look at the top 10 US stocks, now represent 40% of the S&P's value, S&P 500s. You get a sense that the Magnificent Seven, which is what they're called, and their exposure to AI is quite influential, particularly influential, in terms of market capitalisation. And it's quite interesting too. In the report, we put a chart together of NVIDIA, S&P, and United Parcel Services, UPS, which is the largest non-AI and non-financial company in the S&P 500. And it's quite a telling story when you look at the valuations and where it is. UPS is actually a stock which we have recommended in our technical and trade review at the close. Well, we'll talk about that a little bit later. As mentioned, we see that there is a significant weighting in the S&P towards AI. And a lot of us are actually feeling that it's extending itself. Most important thing to think about here is that the valuations are there, but they're based on future earnings. So if the future earnings don't actually come through, then we're pricing ourselves at a level which is far too high. Now, if you really look at the concentration of how this sector, the Magnificent Seven plus another two, obviously the 10 stocks by weight in the S&P, in 2015 it was around about 20% of the value, so it's a much broader index. End of 22 climbed to 26, 2024 30%, and now it's currently 2025 as of September 40% of the index value. And you get a sense that if something moves there or the market sort of readjusts, then there's going to be a rush for the doors, and that's why we think that it's worthwhile probably rotating out of some of these stocks and into other stocks as well, other stocks which are not reliant on the AI. And I think when you actually go through it, NVIDIA, for instance, is the standout AI chip manufacturer and hardware, and it's valued at $4 trillion, but it's trading at 52 trailing earnings and 41% forward earnings. So that's quite high. Now, when you look at that in comparison to the dot-com bubble, we had it up around about 60. Not NVIDIA, but the dot-com stocks were up around about that 60 times. So we are getting to that level which warrants a bit of a concern, although we're not right at there. Now, the main difference between the dot-com bubble and where we are at the moment is that a lot of the stocks are actually profitable. When you look at Google Alphabet, it's deeply invested, but at the end of the day, it's getting good returns or reasonable returns. So that's certainly all right. And that sort of anything happens, it's only come back to around 22, 23 times earnings. But when you look at it, even when you look at Meta and Amazon, they're all sort of producing and they're also profitable. So the vacuum is really not as solid as it was, when we had the .com bubble. And to me, that's a bit of a saving grace. But you never know what happens and how the market will react to it. But I think, in summary, I would tend to think, as I've mentioned, try to rotate some of those profits into other areas. And you can see when I look at the UPS that you can see that has gone through a massive change. It's right on some lows, and technically it looks all right. So if anything there, I think I would be wanting to switch out of some of those high valued stocks, AI stocks, and into some more broader shares. Okay, this week's going to be quite busy. The US government shutdown has now been resolved. Obviously it was a record, but we have got a backrash of data which will come through that'll certainly influence where we're at in terms of what the Fed's going to do in terms of interest rates. As I mentioned before, it's a 50-50 chance that we do get a change. This week we've got S&P PMIs, existing home sales, weekly ADP deployment, corporate earnings, which are all important, Walmart, Target, Home Depot. So there's quite a few things that are coming out which I think are quite important. From a policy perspective, we've got the Federal Reserve minutes. We've also got RBA minutes as well from the last meeting, so that's going to give us a bit of an idea. And of course in Japan we've got GDP and October inflation, so that could be quite good. So overall, a busy week, as we know. And there's gold. As we can see, we've got that consolidation. It hasn't yet moved over in our moving averages, so that's not too bad at all. Look, I would like to see the test of that high again. That's 4240. I would also like to test a high of that 4400 to confirm either there's a top in place or we're just going to come lower, or indeed we're going to continue to correct. Now, a break below last week's low suggests that there is more to the downside, but I still feel that that's only corrective, and I still like it. The weekly scenario there on the chart, just more sideways price action. When you look at silver as well, let's just have a look. And you can see silver there, same thing, a little bit correction. I do get concerned about that high at 55, but because it looks like it could be looming up to a double top. That does worry me a little bit, but let's see how the week transacts. Okay, now looking at oil, I do like oil. Now, contrary to a lot of fundamentals, oil, in my mind, is looking okay technically. The fundamentals haven't come up. I do like this whole scenario here. I like that trend line. I like the double bottom. When I look up here, I like to see it. So if it takes out 63, 50, 40, then I think she can head quite high to that 75, maybe even higher than that. So I do like that, absolutely. Okay, well, that's about it from me. Hope everyone has a great week's trading, and we'll certainly talk to you soon. Bye for now.